Hello, and welcome to this video on budgeted income statements. We're going to go through an example of how to prepare a budgeted income statement given an income statement for the previous year. So here we've got Samantha Brown. We've got income statement for the year ended 31st December 2024. So revenue, 320,000 units, and the revenue was £4,800,000. Open inventory, 25,000 units, and the value was £150,000. Purchases, 350,000 units, and the cost there was £2,205,000, giving us a total of open inventory and purchases of £2,355,000. We then subtract the closed inventory, which was 20,000 units, which was £132,000, giving us a cost of sales of £2,223,000. So the gross profit is the revenue take away cost of sales, and that gives us £2,577,000. Now we've got five expenses here. We've got wages, £500,000, general expenses, £400,000, rent, £250,000, depreciation, £160,000, and carriage outwards at £0.60 per unit, £192,000. Total expenses is £1,502,000, giving us a profit for the year of £1,075,000. So that's what we're given. That's the last year's income statement. Now we've got some additional information for the next year's income statement. In this case, it's going to be the 31st of December 2025. The unit selling price will increase by 8%, and this is expected to reduce the number of units sold by 10%. The suppliers announced a rise of 5% on last year's cost price. The ratio of units of closing inventory to sales units will be the same in both years, and closing inventories will be valued at a cost price for the year. Wages are expected to increase by 7%. General expenses are expected to increase by 2%, and we're told that rent is fixed at £250,000. If it's fixed, that means it will not change. Then we're told 20% reduced balance depreciation for the year is to be calculated on the second year of ownership of non-current assets with a cost price of £800,000. So what that basically means is we're going to be doing it for the second year. So the previous year, the depreciation would have been £160,000. Because that was the first year, that's now going to be our accumulated depreciation. And finally, carriage outwards would increase due to inflation to £0.70 per unit sold. That was 70p per unit sold. What are we to do then? Prepare the budgeted income statement for Samantha Brown for the year ending 31st December 2025. So here I'm going to do various workers now for my revenue, my purchases, and all the other expenses, and plus the inventory. So the original selling price I need to know. To work at the original selling price, I go back to the revenue for the year, which is £4,800,000, divided by the number of units sold, which was 320,000 units. So when the original selling price per unit is going to be the £4,800,000 divided by the 320,000 units. That's going to give me £15 per unit. Now, for our budgeted income statement, we want the next year's selling price or the new selling price per unit. So we start with the £15, then we go to the information to see what happened to it. And point one, the unit selling price will increase by 8%. So increase by 8%, we're going to times by 1.08. It was a new selling price of £15 times 1.08, so it's going to be £16.20. So that's our new selling price. Now, we also want to work at the new number of units now. So the number of new units is going to be the previous year's units, which was 320,000 units. And in the additional information, it tells us about the units sold. We're just going to tell us it was reduce the number of units sold by 10%. So we're going to times it by 0.90, which is basically 0.9. So it's 100, take away 10, is 90, so it's 0.9. So the number of units sold will be 320,000 times the 0.9. So the number of new units is going to be 288,000. Now we can work at the new revenue. We know the number of new units is 288,000. And we know the new selling price, which is £16.20. So the new revenue then is going to be the 288,000 units times the new selling price of £60.20 is going to give us £4,665,600. Now I'm going to put that down now in my budgeted income statement, which I've got below. So budgeted income statement down below. Now, all the categories will be exactly the same as in the original income statement. So there's nothing new to put down in there. So the revenue we just worked out was £4,665,600. Now I'm going to put in the number of units sold here now because I'm going to use that later on. So the number of units sold were the 288,000. 288,000 units. So we'll come back to that in a little while later on. Now, my next point I'm going to work out now is the opening inventory. Now, the opening inventory, we don't actually have to calculate anything. It's last year's closing inventory. So if we go back to the original question and the income statement, we're looking for last year's closing inventory. And it was £132,000. So let me just change that. So it's going to be £132,000. That's last year's closing inventory, this year's opening inventory. Now, so I'm going to put that down in my budgeted income statement, 132,000 for my opening inventory. And again, the number of units, so I'm looking at last year's closing units now, was 20,000 units. So again, I'm going to use that in a little while, so that's why I'm putting it down now. So that's going to be 20,000 units. Okay. So we've got the opening inventory, and now we'll do the closing inventory. Now it says the ratio of closing units to sales units is going to remain the same in both years. So last year, my closing units was, if I go back to the question, the closing units was 20,000. And the sales units last year were, at the top, 320,000 units. That's the ratio. Now it's going to stay the same in both years. Now, in the next year, we know the number of sales units, we just worked it out. It's going to be 288,000. So now we've got to work out the closing units for next year. So this is what you do. I take the 320,000 and I divide by the 288,000. That's basically going to be 1.1 recurring. So I want next year's closing units. I take the 20,000 and I divide by the 1.1 recurring. And that'll give me next year's closing units. So I've got 18,000 units is going to be my closing inventory. So closing inventory then is going to be 18,000 units. Now I've got to work out my value of closing inventory. So it'll be the closing units times the purchase price. Now I don't know the purchase price at the moment, so I need to work that out. So the cost per unit then is going to be the total purchases. So let's go back to the income statement. Total purchases, which was 2,205,000. I'm going to divide by the number of items we purchased, the number of units we purchased. And that was 315,000 units. So therefore, well, my cost per unit is going to be the 2,205,000 divided by the 315,000 units. That gives me a cost per unit last year of £7. Now, I want the new cost per unit. So I'm going to start off with last year's price of £7 and go back to the information to see what it tells me to do. So this is the purchase cost, the supplier's cost. So point to the suppliers announced a rise of 5% on last year's cost price. So it's gone up by 5%, we're going to times by 1.05. So the new cost per unit then was going to be £7 times 1.05. So it's going to be £7.35. So now the value of my closing inventory, we know the number of units. It's there. It's the 18,000 units. And the current cost price is £7.35. So the value of the closing inventory then is going to be the 18,000 times £7.35. Going to be 132,300. So I'm going to put that now in my budgeted income statement. So closing inventory 132,300. And again, I'm going to put down the number of units. Just check. I think that was 18,000. That's right, 18,000. I'm going to use that in a moment to work out my purchases. So it's going to be 18,000 units. Next, I'll get on to purchases. Now, I'm going to look at the number of units I sold first of all. So it's the number of units we're selling in our current year. So this is not, when I say the current year, it's our forthcoming year. So not last year, the forthcoming year. So down to my budgeting statement, we're planning on selling 288,000. 288,000. Now, the opening units we already had, so we don't need to buy them. And the opening units was 20,000. And then we need the closing units, so we're going to have to add on the closing units. And the closing units were 18,000. So that means overall then, we would have need to purchase 286,000 units. So we started off with needing to sell 288,000. So we needed those units. We had opening units of 20,000, so we didn't need to buy them. But we need the closing units of 18, so we need to buy them. So combined together, that gives us 286,000 units. So the cost of our purchase then is going to be the 286,000 units times the new purchase cost price, which was £7.35. So the total purchase then can be 286,000 times the £7.35, which comes to £2,102,100. So let's put that down in our purchases figure. So it was 2,102,100. So now we can complete the top section of the budgeted income statement. So we've got our opening of 332,000 plus our purchases of 2,102,100 gives us a total of 2,234,100. So for my cost of sales, I take my 2,234,100, subtract the closing inventory of 132,300, and I get my cost of sales of £2,101,800. Now my gross profit, that's going to be your revenue, which is 4,665,600. Take away your cost of sales of 2,101,800 to give me a gross profit of £2,563,800. So that's the top part of the budget income statement, also known as the trading section. Now I'm going to look at the expenses. We've got 5 expenses to do. So wages was the first one. So wages, it tells us in the information, so it's happened to wages, they're expected to increase by 7%. Now the wages were previously 500,000. So it's going to be 500,000 increased by 7%. So I've started off here. So it's 500,000 increased by 7%. It's going to be times by 1.07. So that's going to give us then positive 500,000 times 1.07, going to give us £535,000. Now, general expenses, again, there's information about general expenses. And 0.5, they're going to increase by 2%, and general expenses were 400,000. So it's £400,000 increased by 2%. So it's going to be 400,000. 2% increase is going to be times 1.02. So our general expenses are going to be 400,000 times 1.02 to give us £408,000. Now rent, remember rent now, it says something about rents. Rent is fixed at £250,000. So that means it's not going to change. If it's fixed, it stays the same. So rent is going to be £250,000. No calculation there to do, so £250,000. Now depreciation, I've got a calculation for depreciation, which I'll show you in a moment. Let's go back to the information on depreciation then. Right, it's 0.7. 20% reduced imbalance depreciation for the year is to be calculated on the second year of ownership of non-current assets with a cost price of £800,000. Now, the reduced imbalance method is the cost take away cumulative depreciation. Now, the cost of the £800,000. Now, as this is the second year, that means the previous year was the first year, and that would also be the cumulative depreciation at the start of this year. So it's £160,000. So we're going to have 800,000 is the cost. Take away cumulative depreciation of 160,000 times the percentage, which was, just trying to check on a percentage, I think it was 20%. I'm sure it was. Yeah, 20%. So times it by the 20% at the end. Now, 800,000 take away 160,000, going to give me 640,000. and times by our 20%. And that'll give us a depreciation charge for the year. So it's 640,000 times 20%. That's going to give us £128,000. So that's our depreciation charge for the year. So let's put that in our income statement now, our budgeted income statement. So we've got depreciation, £128,000. Now, carriage outwards, or something about carriage outwards as well in the notes. I think it's the last point. So carriage outwards, it said it has, due to inflation, it's increased to 0.70p per unit. So £0.70 or 70p per unit. So I'll put in my little calculations. 0.70. Now, the number of units is the number of units sold, and that was 288,000. So at the beginning there, I can have 288,000, number of units sold, times the cost per unit of £0.70. And that's going to give us 288,000 times 0.7, £201,600 our carriage outwards. So next we want to work out our total expenses. So that's going to be the sum of all of our 5 expenses. That's going to give me £1,522,600. Now the last part now is the profit for the year. Profit for the year is your gross profit, take away your total expenses. It's going to equal then 2,563,800, take away 1,522,600. That's going to give us a profit then of £1,041,200. So that there is our budgeted income statement for Samantha. So hope you enjoyed the video and found it very useful. Thank you for watching. Take care, and I'll speak to you next time. Bye-bye.